welcome. It's now 10:31. Welcome to this first webinar. My name is Kyrre Haugen. I'm General Manager of the Norwegian-British Chamber of Commerce. We have this first webinar together with the Danish Chamber of Commerce, Finnish Chamber of Commerce, and our host is Goodwille Corporate Services. We are expected to start in about 1 or 2 minutes, so there is no need for anyone to make any notes. The slides will be distributed after. The question and answer, we take that in the end, so if everyone can please write that down in the Q&A section at the bottom line of the screen. So yes, so be ready. We're starting in about 1 or 2 minutes.
So good morning, everyone. Thank you very much for joining us. My name is Jackie Brown. I'm the HR manager at Goodwille, looking after all people-related matters. Not too sure if Kevin has muted or unmuted himself, but Kevin is also our CFO who looks after the finance division at Goodwille.
Oh, hi. I can't hear a thing, hence my silence. I'm guessing by the slides that are on screen now I'm meant to be speaking. So this is Kevin, CFO at Goodwille. As I say, I can't hear anything. I've been with Goodwille for 4 years now as CFO, working alongside Jackie and the rest of the team. And Goodwille, for those of you who don't know us, we've been working for 20 years or so helping businesses. Thank you, Emma, for letting me know that you can hear me. Helping businesses from the Nordic region primarily come to the UK, help them get set up and running, and then for as long as they need us thereafter, across a range of 5 core services. Those services cover corporate legal, so that's company secretarial, regulatory and compliance matters, finance, and that's everything from day-to-day bookkeeping to management information and reporting, to cash flow forecasts and planning, to year-end support and everything else in between. HR, and you've met Jackie already, who is our HR manager. So that's policies, procedures, contract, administration, the whole gamut that goes around employing people. Payroll, which I think is fairly self-explanatory, paying those people, and a virtual office offering, which is very useful to many of our clients who don't actually have the need for a physical presence, and we deal with that for them. And if those 5 things don't cover all of their needs, we can usually facilitate via one of our partner network.
Hi all again. So apologies if you're going to be listening to my voice for a lot of this webinar, but I will do my best to make it more interesting. So firstly, if we look at the common challenges which employers are now facing, So we have working from home arrangements as being a massive one at the moment. So the UK government have strongly advised that employees who can work from home should be doing so at this time. That being said, not all businesses have allowed home working before, and those who have definitely, or more than likely, not experienced their entire workforce to be working remotely. So practicality-wise, if it is possible for some or all of your employees to work from home, then there are some areas to think about. In addition to general technology considerations such as laptops, VPN, software licenses, do you have any video conference or communication tools at present? So things such as Zoom and Teams and Skype, obviously other software packages are available. Do you have a home working policy? Who will you be allowing to work from home? So again, it is government advice that everyone should be working from home if it is possible. And so we need to really aim for that ideally. However, if it's not possible for your business, then who will you be allowing to work from home? So perhaps this could be on a rota basis if it's not possible all at once. If you're not allowing everyone to work from home, then make sure that you're not showing favoritism or can be accused of discrimination in any way. For example, if your selection was based on those who are maybe getting public transport to the office, then this would be a more fair way of selection. We also need to think about employee engagement and trust. So do your individual employees have the necessary discipline to work from home? Are they easily distracted? Are they good at managing their daily workload and pressures? And with this in mind, think about how you currently track productivity. Is this still a viable method when you're home working? So ideas could be that you would circulate some practical tips on home working to your employees. That could include how to set up a home office, how to plan and structure their day, encourage a healthy environment, so fresh air and healthy food, obviously bearing in mind the restrictions that we have in place at the moment for exercise. Also set up some fun company activities that could be carried out online. So it's quite common at the moment. There's lots of quiz software and things like that that you could maybe get involved with. So it seems common sense, but really try to encourage a better structure and a sense of community. You could set up regular meetings between managers and their direct reports, department meetings, company-wide meetings, ideally using the video conferencing software that I've already mentioned. This could really help motivate employees and keep them engaged. Particularly if we think about mental health matters, we've got to remember that isolation can be isolating, and home working long term for some can be difficult. So make sure that you're checking in and you're really, making sure that your employees' mental health is okay. If you have access to an employee assistance program, then it's worthwhile reminding your employees that you do have this in place and that is a support mechanism for them there. Now that the schools have closed, unless your employees are key workers, then the likelihood is that when your employees are working from home, that they're going to have the kids at home with them. So the scenario here being that the employee is not caring for a sick child, it is a case of that the children are at home in the same household as the employee. Clearly in this situation, whether the employee is likely to be able to work their full core hours will be very much dependent on their individual situation. Such as the age of the children, whether there's another parent in the same household sharing parental responsibilities, those sorts of things. What we suggest here is that you are as flexible as you can be. Ask yourself, do the full hours really need to be worked as long as tasks are completed? Can you maybe negotiate flexible hours for the short term? If the employee does not feel that the home working will be practical for their individual situation, then you could maybe talk to them about taking some time off via dependence leave, but you don't need to pay them for this time unless it is part of your dependence leave policy. You might want to also consider negotiating some unpaid leave or maybe allowing the employee to be paid annual leave for this time. Also, businesses are, of course, facing financial difficulties. So, of course, in addition to practicalities of where work will be carried out, many businesses are seeing a downturn in income. For employers who have no work to offer employees, they may see no other way forward other than making redundancies. So in answer to this, the UK government have introduced the coronavirus job retention scheme. That's something that we're going to talk about later. But there are other cost-saving measures that you might want to consider relating to people and additional loans if the scheme is maybe not a possibility for you. We also need to remember that there is a concern about job security for employees. It's undoubtedly a very stressful time for employers and employees alike. As mentioned, we will discuss the coronavirus job retention scheme, which is one option if you need to cut costs as an employer. If your employees are still working for you, then communication really is key. And it's vital that you keep the conversation going as long as possible to reassure employees that you will keep them employed for as long as it is reasonable for you to do so. The key being is really do keep in touch. If you are in a position to be able to reassure your employees about your financial position, then do so. And also, again, if you do have an employee assistance program that is available for them, then do remind them that there is this facility available. And of course, there is likely to be an increase in employee absence. So for those companies who are still operating, there are employees who may need to take sick time or self-isolation time for themselves or for any other dependents who are in their household. So depending on the situation, it may be possible to have your employees home working. If not, then we'll discuss this in the section which is coming now. So what if your employees are off due to COVID-19? So acceptable reasons for absence if you're considering sick pay are if the employee is sick themselves due to COVID-19 symptoms, if the employee lives in the same household as someone else who is sick due to COVID-19, so the employee is maybe self-isolating and is not working from home, and anyone else who is self-isolating as a result of medical advice due to COVID-19, and again, they are not working from home. If an employee is looking after dependents, so in this scenario, they are not sick, so it's not sick-related absence. So if we think about this typically relating to childcare-related issues, so obviously the schools and nurseries were closed recently, and in this situation, the employee is unable to work from home, then the suggestion here, as I've already spoken about, would be to be as flexible as possible. So if the job cannot be done because homework isn't an option, then flexible hours aren't possible as well, then you could consider dependence leave, which can be paid, partially paid, unpaid, perhaps agreed annual leave. But for clarity, this scenario would not qualify for statutory sick pay. And of course, if they are working from home, then full pay would be required. If the employee or anyone in their household is sick, then legally they need to have this time off to self-isolate, and therefore they are entitled to payment. And as a minimum, this would be statutory sick pay. So when it comes to statutory sick pay, for any sickness related to COVID-19, you pay statutory sick pay to an employee who is self-isolating for more than 4 days from their first day of sickness. So it's very clear that the period of sickness to qualify for SSP needs to be 4 days or longer, but it is payable from the first day of sickness. So you can pay more than statutory sick pay rate if you wish, if you do have a company sick pay scheme which allows you to do that, but SSP would be a minimum. So there are no longer the 3 waiting days, it is from day 1. SSP is paid at £94.25 per week. And the law has not changed yet. However, HMRC do expect that small to medium-sized businesses will be able to reclaim 2 weeks' worth of SSP per employee that's been off sick, as long as they have been off sick for 2 weeks, and that they have paid to employees who are sick or self-isolating. This will be on a reclaimable basis. So the necessity is that you need to pay this yourself now, to then reclaim at a later date when the facility is available. So if we look at why restructuring should be the last resort, ideally, of course, this is a volatile time, and of course, it's a worrying time for businesses, but we need to be mindful that it won't last forever. So with this in mind, you will probably want to avoid the costs and management time that you would spend recruiting at a later date when things pick up. And it's also likely to be better for you or your business if you are able to implement changes which affect all staff a little bit rather than some staff a lot. And also you of course want your staff morale to remain high. You want to retain your top talent and really avoid any reputational damage in the marketplace. in order to retain that competitive advantage. So firstly, if we look at businesses who are still able to offer work to their employees, so this could be perhaps they are operating with some home working, but there is maybe a loss of income, but they are still able to operate, and ultimately such a situation will mean that it is maybe necessary to reduce costs to protect the business. So methods that you could consider to cost save could be, if you've had some external recruitment happening, of course, put an end to that, and maybe consider if you can place existing employees into that role. You could agree some temporary or flexible working with your employees. So perhaps if you've got any employees who may need to reduce their hours, say they have childcare issues or something like that, then you can maybe have a conversation with those employees to see if that is something that they're interested in. You could ask your employees to take holiday. This isn't a popular choice because we have many travel bans, of course. But there is also restriction on how far in advance of an enforced holiday that you would need to actually give notice to your employees. So for your information, that would be double the amount of time that you want the employee to take the holiday for. But that is a possibility as well. You could also seek volunteers for unpaid leave, so to try and risk the chances of redundancy, and also maybe agree reduced hours. All of these factors will need consultation time and agreement with your employees, but it is an option. Finally, if there is no other work to offer your employees, so the alternative would be redundancy, then this is where the UK government coronavirus job retention scheme comes into play. So this scheme only applies to employees who were due to be made redundant because of the coronavirus outbreak. So it's not because your business was going negatively for a long period of time. It's purely because there is financial struggle because of coronavirus. And as an effect of that, staff members were likely to be made redundant. So the scheme is open to all UK employers who had created and started a PAYE payroll scheme on the 28th of February or before. For employees to qualify, they must have been on the payroll again by this date, by the 28th of February 2020. This also covers employees who were made redundant since that date, as long as you agree to rehire them. So what the scheme allows you to do is to furlough your employees. Furlough is a new employment status for UK, which basically means that the employee does not carry out any work for you at all, but they are still employed. They remain on your payroll, but they don't do any work, and they are paid up to 80% of their wage, which is capped at £2,500. This is payable by the UK government, but it is payable by you initially. So regarding the grant itself, as a company, as mentioned before, you can claim the lower of 80% of salary or £2,500. Plus the employer portion of the pension payment, which will be capped at the auto-enrolment amount. So if you pay more than that to your employees, then this will not be covered by the grant. And also your employer's portion of national insurance. So all of this is calculated on the subsidised wage, and it's not including any fees or bonus or commission. If you choose as an employer to top up that salary or to pay higher than the auto-enrolment pension, then you cannot claim this from the grant. And also when you're paying your employees, please do communicate to them that whatever the salary is that they are eligible for, so whether that be the 80% or £2,500, this is the calculation before tax. So the employees will still need to pay their tax, they still need to pay their national insurance, and they will still need to pay their pension, which will be at the minimum auto-enrolment level at least, unless they have chosen to opt out of that pension or to cease saving into a workplace pension scheme. So you do need to consult with your employees, and you will need to agree signed paperwork to show that this is a furlough. As of yet, we still don't know fully what evidence that we will need to demonstrate to HMRC in future. So we really do suggest that you make sure you have paperwork in place. But also, as a side note, you're unlikely to have had any layoff clauses in your contracts. certainly not unpaid layoffs. So it's especially important to have this paperwork in place to furlough your employees, particularly if you're not planning on topping up. And you should have this in any eventuality. So once the facility is set up by HMRC, which we are expecting by the end of April, then you can submit one claim for reimbursement every 3 weeks for your employees, which is the minimum length that an employee can be furloughed for as well, which is quite an important point. So three weeks is the minimum furlough time for employees. And claims can be backdated to the 1st of March if applicable. So once HMRC have received your claim and you are eligible for the grant, then they will pay it via a BACS payment to your company UK bank account. And when the government ends the scheme, then you will need to decide whether your employees can return to work, or if at that stage you need to make redundancies, then we can look at that stage. And now I'll hand over to Kevin and he can talk to you more about what further business support's available.
Thank you, Jackie. I think just touching very briefly on what Jackie said, clearly the job retention scheme is potentially one of the most beneficial schemes that's been put out there by the government, and I'm sure many of you are considering using that. I'll move on through some of the others. They're becoming increasingly well known, but I still think very much worth going through. They broadly fall into two categories as I see it. Very simply, category number one is really about timing of cash flow, so deferrals of payments and that sort of thing. There are some schemes though, however, which are genuine savings in terms of cost and therefore cash as well to businesses. So starting first of all with the HMRC's time to pay service, I think the first thing to say about this service is it's actually a service that's been around for a very long time, but they are making it known now to businesses that it is there because clearly, as a consequence of the times we are now in, more businesses are under financial distress. This really applies for most businesses to PAYE and corporation tax. I'll touch on VAT in a second, where there's a separate scheme in place. And it's dealt with on a case-by-case basis. A business who is in financial distress as a consequence of COVID-19 should get in touch with HMRC, explain their particular circumstances, and the solution will be a tailored solution if they agree to any solution, depending on their circumstances. So it won't be the same solution for every business. It will be whatever they think works and is fair to all parties concerned. I would, however, recommend that most businesses seriously consider it, because if you're employing people, you're paying PAYE and national insurance on a monthly basis, and we don't know what's ahead. It's difficult now, it could get more difficult, and maximising your cash position is critical. I'll go into more detail on that when I get to the end of the government schemes. But that's the first one, time to pay service. Get in touch with the Inland Revenue, HMRC, explain your position, and hopefully they will agree to something to help you. The second scheme, which is very simple, is VAT deferral. The government have announced that there need be no VAT payments that would otherwise fall due between the 20th of March and the end of June. If a business wants to pay its VAT, it can do. But again, I would recommend that a business does not pay it because it gives you a cash flow benefit equal to that VAT for a period of time. At the moment, the requirement is the amount of VAT deferred has to be paid by the end of March 2021. So a good cash flow timing benefit in there and worthwhile. Some key points though, still important to submit VAT returns on time, notwithstanding if payment is deferred. For subsequent payments after the 30th of June, the current requirement is that they are paid on time. You can't automatically defer those, but who knows, that may change as we move further into this crisis. A practical point, many businesses pay their VAT by direct debit. So I would recommend that for those businesses seeking to not pay and take advantage of this deferral scheme, make sure that direct debit is cancelled. They may still do a direct debit collection run and take the payment anyway. You don't want to get into that position. So that's a nice easy one with a good cash flow benefit around it. Moving into some more specific sector related schemes. One that's been focused on one of the sectors that clearly has been hit the hardest in this scenario is the business rates holiday for businesses operating in retail, hospitality and leisure. What that means is, and this is a saving in terms of cost and cash, it's not just timing, is that there will be no rates payable for businesses in that sector for the rates year 2021, and that year starts the 1st of April and ends the 31st of March. It's automatic. There is no need to apply for it. It will be dealt with by the relevant local authorities. The chances are that they've already sent out the rates demands for 2021, and they are working through now, as I understand it, cancelling those. But there's nothing to pay, there's nothing to do, and that's very worthwhile if in those sectors. I think if a business feels that it should be entitled but isn't, get in touch with the local authority. Some other help for that sector, for smaller businesses, and in this context, this is businesses with properties of rateable values between 15,000 and 51,000, there is a grant available of £25,000, so free money, and free money is always good. For even smaller businesses, and that's those under £15,000 rateable value, there's a grant of £10,000. That again is for retail, hospitality and leisure businesses, as was the rates holiday, and again it's automatic, so nothing to do. Local authorities should just deal with that. If you feel you're eligible and nothing's coming through though, I would recommend getting in touch with the relevant local authority to make sure you don't lose out on that one. In terms of really small businesses, not in that sector, so there is a one-off grant available to businesses who pay little or no rates as a consequence of benefiting from the small business rates relief scheme. They're also entitled to £10,000, irrelevant of sector, but that's really for very small local businesses, you know, bars, shops, sandwich shops, that sort of thing. But worth knowing about, it's free money again, and free money is always a good thing. Moving on to loan funding that the government is putting in place as we move into this crisis. Broadly, there are two areas to this. The first one, I think the one that's likely to be more relevant to this audience potentially, is the coronavirus business interruption loan scheme. That is aimed at SMEs, and in this context, that's defined as businesses with a turnover of less than £45 million. In essence, it is just a loan between a business and a normal lender, a bank or so on. However, what the scheme brings to it is two things. Firstly, if the loan is approved by the lender, and I'll tell you a little bit more about that process in a second, the interest is covered for the first 12 months by the government, so it's interest free. Secondly, it's underwritten to the tune of 80% by the government, which means that the risk attached to the lender in case of default is reduced, and therefore they are more likely to agree to loan in scenarios where they wouldn't. Key point though, and similar to some of the points that Jackie made about the job retention scheme, is there still needs to be a viable business case for this. There still needs to be a viable proposition for the lender. It is essentially a commercial arrangement. There will have to be a plan put to the lender will have to approve that, and if they approve it, those two criteria that I mentioned before will apply. At the moment, it's for loans between up to 5 million for up to 6 years. It's not just loans in terms of traditional loan debt, though. It also could cover overdrafts, invoice financing and asset financing too. There are 40 accredited lenders under the scheme, and any business can apply to any of those lenders. You don't need to work with an existing bank or lender you have a relationship with. You may want to, because that may smooth it if you already have contacts there and they know and understand your business, but you don't have to. So you may bank with one bank who aren't on the scheme. You can apply with any of the 40 that are on there, and if one turns a business down, you can go to another one. That doesn't prevent you from continuing. One important point to note for smaller businesses, I think, is that certainly the big four banks at least have announced that they will not take personal guarantees as security. So that exposes directors in particular a little bit less than it might otherwise have done. So yeah, take a look at what's on offer there on the government website when you get a chance. There's potential in there for a lot of businesses. Moving to the next loan scheme, this really is for very large business. This is the COVID-19 Corporate Finance Facility. And I think one of the things that I've seen in the terms of how this has been defined for eligibility relevance is that it's for businesses who make a material contribution to the UK economy. We are talking real big ticket stuff here. It's relatively short term, initially for 12 months. It's with the Bank of England, minimum of £1 million, but really for investment grade businesses who prior to the crash were in good financial health before the shock and can demonstrate that they can trade through and out of that. So they're the two loan schemes that are currently available under the government support for COVID-19. Moving forward from there, I'd just like to talk a little bit more generally. As everybody keeps saying, we are really in unprecedented times. We know that. Most, if not all, businesses will be adversely affected. There'll be some winners, but there'll be few and far between. And the speed and the scale of what's happened to certain businesses in certain sectors is extremely dramatic and really not been seen before. So I think at a general level, businesses need to get their financial housekeeping more in order than ever. As I think of it, there are probably 3 or 4 key areas that people should already be well into understanding. Firstly, understand your cash position. Understand your cash flow forecast for the next 2 or 3 or 4 months. Have a reliable cash flow forecast so you know what you think is coming and what those pinch points are to better assess what you then need to do. If you don't have one, then a business should be seeking to put that in place as soon as they practically can. That's absolutely critical. Cash preservation is key. Secondly, and it may come as a consequence of that, think about what pools of liquidity you may have that you can access. So that could be existing lenders where you may want to go to for more debt, notwithstanding the schemes we've talked about, or you should be discussing changing the terms given the crisis, payment holidays, extending it, deferring interest, whatever you can negotiate. Do you have any assets in the business that you don't really need or use, which could be turned into cash relatively easily? Of course, taking cost out. Jackie's touched on that from the perspective of people and also the funding to help keep people. But now is the time to be lean and understand what you have and don't carry costs that businesses do not need. So think very hard and assess what's there and take actions where relevant. All common sense stuff, I know, but very important. Thirdly, liaise very clearly with all relevant stakeholders. Employers, absolutely, Jackie's touched on that, but other obvious ones, bankers, suppliers, customers, maybe insurance companies too. Proactively engage as early as possible with all of those stakeholders because they could be part of the solution for a business facing financial distress right now, of which there'll be many. And I would say against that backdrop, it's the businesses that respond to those things the quickest, communicate in the most clear way with those stakeholders, because most stakeholders want businesses to survive in all of those categories. It's in everybody's interest. They're the ones who get on top of all of those areas who will bounce back the quickest once we get through this crisis. So a number of things to think about there at a high level. If you have any further questions around any of those, then ask now, but also get in touch more directly with me or one of my colleagues at Goodwille, and we can talk through some of the things as to how you can help yourself, or indeed we can help you with that. That's it from me. I think.
Yeah. Okay.
Thank you.
Yeah. Thank you very much, Kevin.